Mr. Sampath, thank you so much for your time to us here at NDTV Profit. I would say that some of the statements made at your investor presentation actually stirred up a lot of conversation because of the size of the ambition. What we're trying to understand in this conversation is how much there is to back that optimism. So let me begin with what you have targeted for your OSAT plant. 100 crores in FY26 and 1,000 crores in 27. How is that going to happen?
Yeah, good morning to you all. Thank you for having me. The size of the ambition is essentially the size of the goal that you're talking about. Ambition is beyond these numbers that we talk about. In a journey, what happens is that when we are a little far away from the goal, we make an estimate, and then when we come closer, then we reaffirm saying that, yeah, these are the things that are going to happen. So, what gives us confidence in at least semiconductor is that we have three major international clients already tied up, and we have many more. Once the plant gets fully operational, we have many more who have promised to come and take a look at the plant, and then of course give us some more business and so on. Also, I think we were the first to ship out the assembled chipset from India, so that also given us a bit of let's say a lead in the entire race, if it were, as it were. And in addition to that, our plant is also coming up. The pilot plant is ready in semiconductors. The main plant probably this year will get completed. And technically, things are working. We have people on board, customers are there. So we just have to put a little bit of effort to make sure that our ambitious targets of next year and the year after next get done.
It's doable from what you're describing. This includes the target or the statement that the $1 billion revenue goal will be achieved earlier than planned?
Yeah, so on a 12-month trailing basis, somewhere during FY28, we will achieve this number, obviously. And if everything goes right, and if the environment is not too volatile, and something major doesn't happen, then I think we are posting towards this $1 billion mark, which is like a 9,000 crore number in FY28, which includes all the three businesses. And the two new businesses will probably bulk of their capexes will be done, and then we probably have a reasonable number of clients also onboarded. So whenever we do new clients, what ends up happening is that a lot of effort goes in, and then we cannot really. It's not a linear progression to the finish line, but we are quite confident that with the kind of traction that we have, we will end up at these numbers that we have estimated earlier on.
Okay. You talked about if everything goes right. Mr. Sampath, is incumbent that I ask you that in your own calculations, what are the factors that could go wrong that you are planning for?
Yeah, when I say if everything goes right, essentially I'm talking about non-company related parameters.
Yeah, I mean, obviously, environmental, like what? What could be the possible headwinds?
Yeah, see, one of the possible things is that this tariff and these kinds of things, and those kinds of issues that come in, and also if which is unlikely, but those are some of the things that keep happening. And then also from what we see now, the economy seems to be picking up, and a lot of activity seems to be happening. And we think that that should also sustain, because many of the supply chain changes, etc., happen on the back of political realignments, and also economic assessments by some of these OEMs, etc. So I am only referring to these three factors, which may contribute towards dampening any such demand of anything that you are trying to do new. As you know, so semiconductor supply chain is a new supply chain that we are building up. As of now, all the things are positive. All the major OEMs, other than, of course, China, all the other countries, they are looking at India as a big source. And we see a lot of, not only in semiconductor, but in other electronics too. So if this continues, and if nothing goes wrong there, I think we are in for a good, let's say, strong growth in new areas, and as well as existing areas for next 5 to 10 years time.
Okay, Mr. Sampath, good morning. Alex here. And so you've painted what I think is a very optimistic picture, and there's no reason for you to not be optimistic, the direction where this country and your company is going. But I want to understand, you've talked about the top line. I want to understand about the margin profile, because you're both backward integrating as well as improving your mix, and you're moving up the value chain in certain pockets, right? So what are the implications for the return, for the margin profile? Where does it go, and explain the trajectory? So one would assume that this is a journey, as you've pointed out. Talk about the second half, and then heading into next year.
Yeah. Absolutely. Good morning, Alex. And see, fundamentally, this margin is a result of blend of business and also the onboarding of new customers and so on. So in the same area too, there are different customers with different margin profiles, etc. In our assessment, based on our order book as well as whatever we are expecting to get in the marketplace, we think that the margin profile is likely to be stable, and probably it will keep increasing on the consolidated basis, maybe 30-40 basis points each year. And if we are lucky, then maybe a little larger too. So we are quite confident that margin profile, because of the actions that we have taken and because of the blend of customers that we are getting, and also the newer businesses like the Semicon and the PC board, they are margin accretive. So from that perspective, we can be confident about the margins going up over the next, let's say, 5 years time frame.
But forgive me for being a stick in the mud, but I would like to push you to give us a range, if at all you can give us. And I don't doubt at all that it can go up. Yeah.
I can. So as of H1, we were at about 16.3% in terms of EBITDA, and then that would probably be sustained, if not bettered, this year. And in the next year, when at least some significant amount of business, maybe 15 to 20% comes from newer businesses, that will go up correspondingly, let's say about 100 basis points or so. And post that, it depends on how well we execute the new projects, so that in new projects also there are clients which can be onboarded with a better margin profile, especially in the advanced arena. So next year about 1%, and thereafter maybe about 50 basis points you can expect increases for next, let's say, 2-3 years time frame. What happens at the end of it is that once the margin goes up, then we also incur costs and all that, and so they may be deleverage in operations. So between 16 to 18%, the margins will go up and down.
Understood. And thank you for that. Mr. Sampath, I do want to also ask you about the efforts that you are undertaking on your working capital. I believe the direction is that you're bringing it dramatically lower. What is the guidance for the second half, and what are the implications on the efficiency of your capital management?
Yeah, so working capital is a moving target. So what happens is there would be some environmental things, there will be something related to business which causes these working capital plans to go awry sometimes. And we think that we can bring it back under control, maybe less than 80 days this year, due to some specific business-related reasons. And coming years, maybe we can probably target a little lower, between 80 and 70 days. And we think that beyond that, of course, we need to do improvements, but they will come in smaller chunks. So less than 80 days this year, and between 70 and 80 days for the coming fiscal, let's say FY27.
Jairam, good morning. Hira this side. I'll take that question from working capital forward with impact on the operating cash flow. Confident that the company will become cash flow positive, and this is without continually straining your working capital, because your order book is really large when it comes to execution. So if you have to look at executing a large order book without straining your working capital and then becoming cash flow positive, how is that dynamics going to look like? Because you have large government-like projects like smart meters as well.
Yeah. So, just an overall comment, we have a healthy business profile. We have cash coming in. It's just that last year we probably did not have too much of positive cash flows on our operating cash flows on our P&L. But this year we would probably end up doing this. And this year it will be significantly positive cash flow, maybe 100 crores plus of OCF is likely to be generated. So we have to make a choice between being looking picture perfect and harnessing the growth. So we have chosen the latter, that is harnessing the growth, because right now next 5 years time frame, 5 to 10 years time frame is maximum that Indian companies have to grow and then take it to scale beyond say $1 or $2 billion, right? And so obviously the overarching goal, or if we were to kind of rack and stack the goal, the first goal is to grow profitably with good clients and in areas which are high tech. And then, of course, closely followed by improvement of efficiencies so that we can put in some reasonable amount of OCF in our financials. So you can expect this year, of course, positive cash flows, so maybe more than 100 crores or so. And the coming year, of course, this number will increase. Our eventual target is at least 50% of operating cash flows are generated so that they can be reinvested into business to create capacities. As you know, growth has to be funded. So in the EMS sector, we think that we have enough of traction to make sure that we don't have to put in some more money from outside for achieving this 40-50% kind of growths in the EMS sector.
So, Jairam, you know, an important point you made over here is that growth needs to be funded, and some portion of that funding needs to come in from the government side as well in the form of subsidies, right?
Yes.
If you have to look at your total capex very high in terms of FY26 to 29, what is the clear timeline that you have when it comes to the government subsidy disbursement? Because it's almost what, about 40 to 50% of your capex is going to come in from the government. And how will this phased funding be synchronized with this operational ramp up that you're talking about?
Yeah, so we have done this math. We have laid out a detailed plan now that we are very close to execution of the new project. So we are a little more clear about the unit economics, and we are a little more clear about when we are going to get customers onboarded, how much business is going to come. So what our assessment is that we have given sufficient buffers for any of these government subsidies if there are some marginal delays, and we also have lines of credit from the banks ready with us, sanctions ready with us in case we require. But our preference would be to generate cash. So once we start doing business, let's say 40-50% capacity utilization, the new businesses, we'll start generating cash there too. And so and we also have raised some funds in the marketplace. QIP1 is there, QIP2 is there. So we think that this is not a big concern actually as far as execution of the capex with the monies that we have on access is concerned, and it's not going to in any way affect our existing businesses, which is the EMS business. So we have taken sufficient care to make sure that there is insulation of, or rather appropriate usage of these capital monies that we have raised for different capexes and so on. And our experience with whatever government subsidies so far under the new schemes, for the sunrise sectors, it has been positive. And we have not seen any delays from the side of the government so far.
So that's a positive. Just one very last and quick question. I have to ask about the space tech business because that truly sounds fascinating. Dummy satellite in 2026 May and operational satellite in December 2026. This is on track?
Yeah, I think it is on track. Hopefully, we would. These are adjacent technologies, and we have some other ambition also. It's not just the satellite that we want to build. We want to do other things, which may include things like drones and all that. So hopefully, we'll get there. See, these beginnings have to be made now if you are to become a big player in these kinds of areas in a couple of years' time frame. So, so our focus is, like I said, our focus is to get to harness the growth that's already available in the economy and make sure that we get into good clients, high-tech areas, and profitable, let's say, businesses. And then, of course, a little bit straining of resources is expected, but we don't think that's going to affect our day-to-day working of existing businesses.